Hello, hello, hello. How's it going, everybody? Welcome to a Capital Hungry Market Analysis and Trade Ideas webinar. How is everybody doing this morning, afternoon, or night, depending where you are in the world? If you guys enjoy these streams and enjoy the content, make sure to like, subscribe. If you're new here, make sure to take a second to read through the YouTube description, as it will tell you exactly the process we follow, okay? But basically, through this next 30 to 60 minutes, I'm going to be breaking down the markets fundamentally and technically, talking about current fundamental impacting factors, market sentiment, economic events we have in focus, and then doing some technical analysis on gold, GBPJPY, GBPUSD, EURUSD, USDCAD, and US30 in that exact order, okay? So if people are joining the stream late, don't worry, just tell them I'm gonna go through that process. This is gonna be a save stream. You can always rewatch it whenever. And primarily, these webinars are for trade setups for potential scalp and intraday trade ideas over the next coming sessions and potentially next couple of days, depending on the overall market structure, movement of order flow, and market volatility. Okay? So no rush. Go grab some popcorn, go grab some snacks, grab a drink, and kick back. I'm gonna be going through everything step by step here. Okay? Okay, everybody, let's jump into it with some recent key fundamental points. So, what the market focus for investors has been on is, of course, the tensions escalating between Russia and Ukraine. And of course, the other countries get involved, mainly a part of the NATO treaty, the NATO regions. So we're seeing today, which I'll show you in some of the headlines as well, that Putin, during his speech, is showing an increased intent to invade Ukraine. He is also very pro in terms of supporting the anti-Ukraine movements that are happening in Ukraine and potentially, quote unquote, liberating a couple of regions and bringing them back to Mother Russia, basically using them as scapegoats to try to start to take action into Ukraine. For those of you who want some more information on the Russia and Ukraine tensions, then you can obviously just go watch the full breakdown I did on that. So what we saw happen through the New York session today is Putin increased the amount of pressure regarding his intent to invade Ukraine, and we also saw various NATO countries putting economic sanctions on Russia. We saw this coming from various Euro regions, the United Kingdom, USA, and so forth. Even Canada and Trudeau got their 2 cents in towards the end of the New York market session. Okay? We can see as the market focus is starting to shift into more on the war between potentially Russia and Ukraine and other parties getting involved, all of the focus on COVID has completely disappeared. COVID went home now, okay? And what we can also see when we're doing our market sentiment analysis and looking at global equities movement is smart money is clearly on edge as we're reaching the point economically of reaching closer and closer to central bank rate hikes and, of course, the market tensions regarding the Russia and Ukraine issues right now, which can be impacting the commodities market, can be impacting the equity market. Obviously, right now we're seeing it's more on a economic front as sanctions are taking place. But if this starts to escalate on a physical front and other countries get involved, that's when a lot of the market fear will really come to scene, okay? So some news headlines, some important news headlines that we had throughout the day from the New York session, actually from the Euro session through New York and even up till recently now, starting from the bottom to the top, is you can see Norway Prime Minister says Norway's to join the EU sanctions against Russia over Ukraine. So there's multiple regions in the Eurozone that are economically putting on sanctions against Russia. UK, Boris Johnson announced asset freeze on Russia's banks, on 5 of their largest banks. Then during the actual New York session, Putin says recognized expanded version of 2 Ukrainian breakaway regions. So within Ukraine, he's labeling these various 2 regions as anti-Ukraine and more pro-Russia, and as those regions internally are trying to liberate themselves and break away from the Ukrainian control, but the Ukrainian government is not allowing that. So he's using that as like a scapegoat to say, hey, these 2 regions within Ukraine are trying to break away. I'm just trying to help them come back to Mother Russia. You know what I mean? So anyways, then Biden followed up saying, Biden says Russia has now undeniably moved against Ukraine by declaring those independent states. So you can see how the tensions are escalating. Then at market close, we saw Maxar images show heavy equipment transporters in Western Russia. So there is a physical military buildup in Western Russia and of course on the Ukrainian borders, and Putin is showing his increased intent on invasion. So in terms of market sentiment, when we're seeing the order flow of smart money through the markets, you can obviously see that the dollar, even though it's been ranging on the intraday time frames, has been a bit more bullish. The Japanese yen, even though it's been ranging for this week so far, has been more bullish from its lows, and equity markets across various regions have been more bearish. We can see the volatility index is still edging up, showing more fear, uncertainty, and doubt within the US equity markets. But for us to see mass market fear, we would need the VIX to break above the 32 handle. But nonetheless, it is still holding some of that bullish intraday strength. We can see the Japanese yen from its lows over the course of the last 8 days is still holding some intraday bullish strength, with the potential to dig back up into the 87.5 and 88 handle, especially if we have further fear tensions escalate, okay? And the dollar index has already been bullish on the higher time frames, as investors have been further pricing in the inevitable rate hikes to come, which is a fundamental bullish factor for the dollar. And war tensions is also a bullish factor for the dollar. So once the dollar really has a clean break above this price sensitivity area at 96.5, it's a real clear upside move to start revisiting these highs, especially if tensions continue to escalate, which they primarily have been escalating from what we've seen and what I am showing you there, okay? So the market sentiment is showing us more fear, uncertainty, and doubt. You can look at the various stock markets across the globe right now. UK 100 bearish from its highs. German DAX and the Euro stock markets are bearish. US 30 is bearish back down to a very key daily demand zone. Japan equity markets, China, Australia, Asia Pac, all very bearish, as we're seeing buyers take profit from the record highs, as the stock markets have done such an aggressive rally over the last 2 years. And of course, with the inevitable rate hikes to come being a bearish factor for the equity markets. And don't forget now, the Russia-Ukraine war tensions, okay? So the sentiment is on the fear side, but I want to give you guys a major tip. This market fear that is coming to the scene, it plays against the current smart money moves. What I mean by that is smart money, the market makers, the institutions, the 1%ers, whatever you want to call them, right? They have been primarily extending their wealth over the course of the last 2 years within the stock market, right? Of course, other asset classes such as the real estate market, commodities, and so forth. But what's really been the major wealth gain has been the huge rally on global stock markets ever since the pandemic crash. So it seems like that greed train is trying to hold on to as much as possible. So even though all this fear is building, we're not seeing the market makers cash out or really liquidate out of stock market positions just yet. What I mean by that is I want to show you guys something very important, and I'll show you guys, of course, we're going to go through the analysis on the other pairs, but just for you to understand this concept. So you can see, of course, US 30 as an example of the US stock market. This was the crash point, pre-pandemic point. Huge gains over the last 2 years. And from these highs, we're getting exhaustion by buyers, profit taking in more bearish moves, correct? But what you have to understand is over the course of the last year and a half, right? Over the course of the last year, this demand zone has failed to break even when we had Delta variant fears, even when we had Omicron variant fears, even when we first had the interest rate hike fears. You can see we've had very clear-cut fear catalysts that bring us down to these lows, but buyers always end up grabbing up this dip. Now, I'm not saying that this dip is going to get bought up again, but what I'm saying is we've been playing this downside so far, and the downside has been very clean bearish price action, very clean bearish market structure on the intraday time frames. If you follow the previous market update webinars, right? And if you follow the previous live trading sessions with the market fear and interest rate hike scares. But this demand zone around 33,500 is a major make or break price sensitivity area. In my opinion, once we have technical breaks below here on the US stock market exchange, this being Dow Jones, US Wall Street 30, US 30, whatever you like to call it, right? Once we have a technical break below 33,500 and hold below there on the intraday time frames, that's what's really showing me the market fear is starting to take over now. The market makers in Wales who have been riding those buys, they're cashing out, liquidating positions, and technically trading below this very strong demand zone. That's when the market fear is going to be most evident. When we see US 30 start consistently trading below 33,500, especially if these Russia tensions continue to escalate on a physical front, then that's when you're going to see Japanese yen explode in value. That's when US dollar is going to explode in value. And that's when gold's going to also explode in value. Oil's going to explode in value. Okay? So, yes, we've had the market fear. Yes, we've had more sellers in control on the intraday time frames. But just as a very key price point of interest, you can clearly see institutionally that anytime we dig down into this price sensitivity area roughly, you have sellers exit out and a ton of buy orders being collected from this price sensitivity area. Now, the only difference is based on the market structure, every time we've had a bounce from this area, we led into a significant higher high, right? Continued upside rally up until here, where we had a bounce but could not revisit the previous highs, could not even revisit the November highs. So it is showing a lot more sellers pressure below 36K as we couldn't reach the previous highs or continue the bullish trend, and we didn't have enough buyer order flow connected from this demand zone. But to really see that long-term macro fear that can last days to weeks, we need to see US 30 trading below 33,500, and that's going to come from more physical conflict escalations with these Russia-Ukraine tensions, and of course the inevitable rate hikes. But we'll talk about individual US 30 analysis in a second. Now, we understand the current market sentiment is more on the fear side, right? Dollar, even though it's ranging, is still bullish. Yen's holding some bullish strength from the lows. Equities are a bit more bearish when we're looking at regions across the board, okay? We understand what is causing that. We've gone through those events. We understand the market impact. Now, we're going to mark out trade ideas, doing some technical analysis of the market structure and price action, right? And go to gold right now. But before we do that, just understand what economic events we have on the docket. So not much to focus on in terms of Asian session economic events. Even Eurozone overnight is going to be very quiet. You're primarily going to be focusing on your reactive headlines here and seeing if we get continued tensions and escalations with Russia and Ukraine. But we have Germany Consumer Sentiment Report at 2 a.m. Eastern, 2:45 a.m. Eastern, France Business Climate Report, and 5 a.m. Eastern, Eurozone CPI data, inflation data. Okay? All right. Oh, Ted's in the chat. Yes, I'm coming. We're on gold right now. Okay, so with gold here on the higher time frames, of course, we have been a lot more bullish off this very strong daily demand zone, where ever since May, we failed to break below this 1750s area. And what's also very significant is every single time we have buy orders collected from this demand zone in this general area, right, we extend into a rally of higher highs. Okay? So with the current tensions, very high economic inflation still, and obviously investors hedge fear risks and market risks by pooling liquidity into gold, we've had a very strong bullish rally, breaking above previous significant price sensitivity areas to the left. Now, one thing we want to note is it's very normal for gold to do aggressive pullback plays. So this is very normal with how it trends. You can look at this in any bullish trend here. Even when you're zooming in on the intraday time frames, you can see you get these consolidation and pullback phases. Here, for example, you have some huge pullback phases before continuing up. Now, gold, as it's been bullish and rallying up into the 1920s, has had a very minimal pullback phase on the higher time frames. And what we have to keep in mind is that we are reacting at this previous price sensitivity area the same time we're starting to get some exhaustion at the 1912 highs. So yes, I'm still very bullish on gold, but what I am looking out for is if we get any signs of exhaustion here. For example, let me zoom in a bit. You can see gold has very clear reactions at previous price sensitivity areas, right? I personally like to call them order blocks, resistance, price zones, whatever you want to name it, whatever your terminology is, that doesn't fucking matter, okay? But here, for example, this previous price sensitivity area, you can see as gold buyers were running extensively high with a huge bullish move with the initial Russia tensions, we didn't break this price sensitivity area on the first go. You actually had a daily candle almost drop 300 pips to the previous daily highs to collect more buyer liquidity. Then we had enough volume and buyer order flow to break above this price sensitivity area on top of more tensions. Does that make sense to everybody? Right? So we're seeing something very, very similar happening now at this order block in price sensitivity area around the 1910s. Okay? Obviously, the very easy buys would be if we clear above the 1910s and just have a continuation move like we did here, breaking above the price sensitivity area, validating more buy orders in the market after having a deeper pullback, and just continuing to the upside as we also had the continued tensions, right? But if we don't have initial breaks of this area, when we're looking at the intraday time frames here, we're starting to enter a bit of a higher time frame consolidation zone and also just some minor bearish pullback structure. And if gold wants to do deeper pullbacks, even down to 1880s, this consolidation and demand zone low, that would still be perfectly respecting the higher time frame bullish market structure. So for me on gold trade ideas, if we start to trade below 1897 here, I can expect deeper pullbacks to grab liquidity from previous high price sensitivity areas or key level 1883 buys back up to the highs, or 1888. This will be based on intraday price action. For example, if the hourly candles just fail to break below 1888, this would be a great buy zone with putting your stop below the candle wicks if we have continued failures to break below there. But obviously, if we have candle closures below this liquidity zone, where you have to understand this liquidity zone here is the last price sensitivity area on the intraday time frames that took us into these new intraday highs. You can see we had buyers print new highs here, a pullback phase, more buy orders collected from the 88s, and then had another bullish rally to these highs. So it's very normal when you look at how gold previously trends that you can get deeper pullbacks to previous highs or price sensitivity areas. For example, you can see this liquidity grab zone here. You had highs printed by buyers, a pullback phase, new highs printed, a pullback that came all the way to that same demand zone, still failed to break, still maintained the bullish price action and market structure before continuing up again, right? So if we don't see any new fear tensions, we do have the potential for some pullbacks here on gold before continuing up. But this is what I'd see for trade ideas. Just short-term pullback sells below 97 to set up better risk versus reward buys in these areas. Or if we just break and hold above 1902 buys and the safest buys above the 1910s, 1912s. Mainly, I'm in a buyer bias on gold. It's just that we're starting to consolidate at the high. So I'm just either looking for pullbacks to these better demand zone buys, or if we just hold above 1902 or the safest buys above 1912. If you want to play the pullback sells below 1897, that's your own decision. I'm personally waiting for these pullback plays. Green boxes are my buy zones. Okay. Because especially when I'm looking at the daily here, it wouldn't be out of the normal with this daily candle to make a bit of a deeper lower wick. It doesn't have much of a lower wick yet. It doesn't mean it has to, but it wouldn't be out of the normal to grab some more liquidity like how gold does, make that wick, and continue overall bullish to the upside. But you have to watch the tensions overnight, because what you have to understand is Putin's speech and Putin showing his intent to invade further. Like these headlines here, Putin wanting to invade further, Putin building up his military on the Ukrainian border, all these countries putting on economic sanctions, all of that information, all of those events, that's priced in. The markets have priced that in, they've digested that, right? So what I'm trying to tell you is we need further escalations now. Either we need more aggressive economic sanctions on Russia or further physical aggression by Russia into Ukraine. We need new events that haven't been priced in that will bring new market fear to the scene. That will potentially be the catalyst that can break the equity markets below this price sensitivity area. You know what I mean? But anyways, those are the trade ideas I see on gold. Just playing the bullish bias, waiting for the pullback buys or the breakout above 1902. Safest is like this situation where you had a high printed, and you have to be patient for this, but you can see the same idea. Very aggressive pullback. You start to make your support and you get your exhaustion by the sellers. And even if you didn't get these 1855 buys, right? You can see as you finally get a clear break above the previous highs, you get very nice continuation bullish moves. And as a day trader or scalper, you don't need to get hundreds of pips, 200 pips. Yeah, those days when gold pays you 100 pips and the volatility's there, that's great. That's a bonus. But just some of these ranges, even waiting for the continuation of this trend and patiently waiting for 1912, you know that if we break above 1912, we're continuing the bullish trend. The market fear is in play. We're breaking above the previous highs. And not just that, we're also clearing above this daily price sensitivity area here. Where you break above there, you're flying after that. But it's not going to be out of the ordinary for us to get some pullbacks at these price sensitivity areas. Okay? So just keep in mind, if you see gold do some aggressive pullbacks overnight, don't be shocked. Just wait for your confirms of the sellers exhausting out, wait for the supports being created, jump back in the buys, or wait for the continuation with the trend buys. And those are the price sensitivity areas, of course, too. Okay? Now, GJ has been a lot messier, as overall GBPJPY is very bullish. On the higher time frames, obviously the yen has been trending down, UK stock markets have been more bullish, but we haven't been able to break above this significant high price sensitivity area, obviously, as we had the Russia tensions come into play. As the Russia tensions have come into play, what we have seen is Japanese yen obviously start to gain some more strength on the intraday time frames and start to have that bit of a bullish pullback from its lows here, right? So when you're looking at yen movement, it's closed individually now, but if yen breaks above these intraday highs and we have more market fear, we can expect the yen pairs GJ, Euro JPY, AUD JPY to be a bit more bearish. But for me to see sells on GJ, we would need clean breaks below 156. The intraday time frames, when we go to look at it, have been extremely messy. Okay? So when we're looking at the intraday time frames, overall at this range, you can see it's very normal. Every time we've peaked here on the intraday time frames, we start to enter some messy ranges. Here you can see as you're edging your way down, you're having these very aggressive pullback plays. Here you can see a very aggressive higher time frame consolidation. Same type of mess you're seeing in this general area from the 156s. Okay, so it's best just to play it safe. Yes, you can obviously scalp some of these lower time frame ranges, but in my opinion, it's best just to play the current structure and not touch this whole 50 pip range here from 156 all the way up to like 156.5. Here to here is disgusting messy price action. Okay, so these are some safe trade ideas I would see on GBPJPY. If we can continue to respect this current minor bearish market structure, as well as Japanese yen continue some strength, I would only be looking for sells if we remain below this price sensitivity area here, which would be safer sells below 156 flat to start revisiting these low points as a target zone, with the safest sells with continued fear escalations and breaks below 155.5. Scaling down accordingly. Okay? I don't really want to play any guessing games. I'm trying to see if I can get some hero top sell. You know what I mean? I would just much rather see if we can start trading below 156. This pathway of price on GJ is if we get further escalations. I'm going to put a big F here because this is if we get further fear. All right? If we get further fear regarding the Russia tensions, Japanese yen pairs overall pick up some strength, then I could potentially see these deeper sells at those price points given. Okay? I would only be looking for GJ buys if we break above 156.8. Way too much noise, way too much price sensitivity, way too much rejection here whenever buyers try to break above this price sensitivity area. Okay? So we went through gold so far. We went through GJ. Now, we're still looking to primarily play a dollar bullish strength bias. Don't forget the market sentiment with interest rates potentially going up in the near term, bullish for the dollar. Obviously, we have the fear tensions with military conflict, which is bullish for the dollar as the world reserve currency and safe haven currency. And equities have been softer, VIX more bullish here. Okay? So I'm still expecting to play dollar strength. We can easily see that these pairs such as GU, EURUSD are very bearish. Just similar to GJ, GU has been in this extremely messy intraday range. I still see sells from the top of the range, and the safest sells would of course be below 1.35 flat. And I'll be talking about that here on the intraday time frames. Other than that, what you can see on the intraday time frames on our dollar pairs is a huge mess. Yes, if you really want, if you like to trade these types of market conditions in this indecision, you can scalp the highs and lows or buy the highs and lows of the range, because you can see very clear-cut confirms to the 3.5 level and 3.65 key level. But this is a disgusting range if you're looking to hold trades, if you're looking to play intraday trades, because you can't really obviously hold anything. So I'm still on a sell side bias on GBPUSD with the expectation of dollar to continue bullish and more market fear. So even if we were to come sweep these highs again, I'd still be looking for sells. Breaks below 354 sells and breaks below 3.5 sells on GBPUSD. The monthly candle, I'm not too worried about yet. This is just for intraday and scalp trade ideas for the next coming sessions. We still have another like full business week with the monthly period, of course, here. I know February is a shorter month, but we still have like a full week, right? So EURUSD, higher time frame, bearish. Majority of risk currencies like GBP, AUD, NZD against the dollar are going to be bearish, as the world reserve currency has been extremely bullish on the higher time frames for the reasoning stated. You can see a lot of sell orders being collected from this previous low price sensitivity area here, still maintaining the bearish market structure. If we can get clear-cut breaks below 1.3 flat, it's very nice targets to these previous lows as a range to play, when you can see how the markets have been overall trending, just having pullbacks, but overall revisiting every single consecutive higher time frame low that has been printed while not breaking the overall bearish structure. Now, again, our dollar pairs on the intraday time frames, very messy range. If you're waiting for EURUSD, clean sells below 1.31 and sells below 1.28. You can scalp that, day trade it. I want to start trending down, scaling back down to these 1.114 lows. Market fear is still evident. Euro is still weaker when you're looking at it versus majority of safe haven currencies. Sorry, when you're looking at it against the dollar, and when you're looking at the Euro Central Bank's monetary policy stance compared to the Federal Reserve's, they haven't been as hawkish or aggressive. And the ECB hawkish tone we did see, the little bit of hawks from the last Christine Lagarde speech, which was this bullish move here, got instantly faded out as more sell orders collected from the key level and price sensitivity area. We are starting to form some intraday bearish market structure, trading below 1.31 and 1.28. If dollar can continue bullish on the market fear, is very nice, easy sells. Now, USDCAD is bullish on the higher time frames here, but you can see a common pattern with the dollar pairs ranging. USDCAD is going to have even more indecision because the Canadian dollar has been extremely bullish with oil being so bullish, right? But what we can also see is dollar index has been holding strength too. So what we can assess based on the technical movement is when you have that fundamental strength for the Canadian dollar, that fundamental strength for the US dollar, you have a technical range being printed on USDCAD. I'm still more bullish on this pair. It's just that we need a break above this consolidation zone, 283, which is very safe, easy buys. Now, last but not least, the US equity markets. I would love to see an escalation of these physical war tensions and Russia actually start to invade and finally start to break below 33,500 and see us trading below this demand zone that I was showing you guys on the higher time frame. On the intraday time frames, we have some nice bearish market structure forming here. Even if we got a pullback to 34,200, 34K, I'm looking for sells. And 33,500 is the exact safest sells to play when you're looking at the US equity markets. All right, everybody. So we went through key recent fundamental points and how they're impacting the markets and the trading instruments that we analyze and trade every day. We went through some important news headlines and the impact it had on the charts and what we can see escalating with the Russia tensions. We went through some market sentiment analysis, looking at the individual movement of the US dollar, Japanese yen, global stock markets, and what it tells us about investor behavior and market sentiment. We've gone through what economic events we have overnight and what's in focus. Analysis and trade ideas shared on gold, GJ, GU, EURUSD, USDCAD, and the US 30 stock market index. For people who are asking about more information about fundamentals, technicals, and so forth, just go to the Capital Hungry YouTube page and you have tons of playlists and educational webinars right at your disposal there. Okay? Go to the Capital Hungry, go into this description. You have the Twitter linked, the free Telegram analysis channel linked, all these playlists, 1-minute breakdowns and news, individual market analysis, live market updates, live trading streams, educational trading webinars, self-development webinars, and so forth. Free Telegram analysis channel and the Capital Hungry Twitter. Some guy said, hey, thank you for the fundamental knowledge, but is there any good Instagram pages to follow for more fundamentals? You are a lost cause, my friend. You're literally on a YouTube page where you didn't even check the YouTube page itself because you're fucking retarded. And you think you're going to find your fundamental gold mine on somebody's Instagram posts. You got to be a fucking retard. Everybody, this guy, Tirth Singh, is a prime example of the masses right now, right? This guy needs to disable his Instagram. Classic sheep, classic part of the wrong side of society. All right, everybody. If you guys enjoy these webinars and want them more often, like and subscribe. I will be doing a live New York scalping session tomorrow morning starting at 7 a.m. Eastern. Pretty much 11 hours from now, I'll be live again. All right? 11 to 12 hours from this current time, I'll be live again in the morning for a New York scalping analysis session. All right, everybody? Follow the YouTube page, like, subscribe, turn on notifications. Check out all these playlists and webinars on the Capital Hungry YouTube. Capital Hungry News Twitter, 30,000 tweets. Capital Hungry free Telegram analysis channel. I'll see you all tomorrow morning. Yeah, Roger's probably streaming as well, so I'll probably only have 100 viewers, but I'll still be live.